Hello, entrepreneurs. Joe DeChara, CPA extraordinaire, coming to you live from downtown Bethpage, Long Island, New York, for another amazing episode of How to Win at Business. And if you're watching live, please give me a hashtag live. If you're watching the replay, give me a hashtag replay, because it does something to our analytics and it makes me feel good. And if anything I say resonates with you, if you'd like to book some time with me, just go to timewithjoe.com. I love sharing some of my knowledge and experience with people. I love getting interesting questions, and I like when people try to stump me. Okay, and I haven't been stumped too often, not when it comes to this stuff. And this stuff today is, we're going to be talking about something happy. Yeah, finally, a happy thing. We're going to be talking about credits for individuals and businesses, because some of these are actually really, really good. And I think it's important that people know that they are entitled to credits. Now, I posted in the chat the definition of uh, what a credit is. So there's two types of tax credits. There's what they call refundable credits and non-refundable. So what's the difference? The difference is, if you have no tax liability, in other words, you owe nothing, if you qualify for a refundable tax credit, you still get a check. It's like they're giving you money. A non-refundable credit is one that only reduces your tax liability. So if your tax liability is zero and you get a non-refundable credit, you don't get any credit. Okay, so that's the first thing. It's a little confusing, but whenever you see a credit that's refundable, the happy sign should go up. So let's take a look at some of the credits, and who might qualify for them. And the first one, this is awesome, because let's look at the Savers credit. Now, the Savers credit gives you a credit between 10 and 50% of what you've contributed. So it gets a little convoluted, because if you make too much money, they reduce how much you can get. But let's see if we can see this, the form 880, and when they give you the instructions, okay. So over here, if your income is, if you're married filing jointly and your income is below $40,000, you get up to 50% in a tax credit. Now, the ironic thing with this is, the people that are in a lower tax bracket usually don't have extra money to contribute to their retirement, unless they're diligent and they have some sort of discipline. Okay, so the tax credit, let's go back to that. So in other words, if you contribute, let's say $6,000 to an IRA, and you make under $40,000, they're going to give you back $3,000. That is huge. Now, if your income is higher than that, you might get as little as 10% or zero. But the fact that if you know about this, so I'm thinking that there's probably millions of people that have put money into an IRA and never took the credit. So that's not a good thing. So let's see what other kinds of credits there are out there. And most of these credits are very, very simple. You don't need all kinds of information It's not like that crazy Obamacare form where you got to put in monthly figures in 8 different columns. No, these are not uh, difficult. Uh, so here's an interesting one. So if you work for more than one company and you uh, max out on yourself on the Social Security taxes, you can actually get a credit for overpaying your Social Security taxes. Okay, that's another thing. I'm not sure people realize this, but uh, you're entitled to it. Again, it's more about knowing what's available. So now they have the advanced child tax credit. So now this was huge for people like my son because he has 2 little girls. They're going to daycare, and it's pretty expensive. So now, rather than wait until March or April when we file his tax return, they've been getting monthly checks to help offset uh, the childcare expenses. I mean, that makes sense. That's what the credit was for. Uh, Now you can get a credit for other dependents if the situation's right. Okay, you get a where is it? Publication 972 will tell you about some more credits. Okay, I don't want to go into all the little details here, but the purpose of this training right now is really to make people aware of some of the credits that are available. So now also residential energy credit. That's if you put like solar panels on your house, an efficient fuel system. Now, every also you got to be cognizant of these credits because sometimes you got to have the supplier. They should have some kind of identification number. So like with the solar panels, they all have some kind of registration, and you probably have to put that on the form. Education credits. So we know these have been around for a long time. So if you or somebody you know is going to college, you might qualify for some healthcare credits. Let's see what other kinds of credits we have. If you're subject to alternative minimum tax, you can recompute it every year and maybe get some of that money back. Foreign tax credit has been around for a long time, since before me, and that's when you have when you pay taxes on things like dividends from other countries. Okay, so that happens, and when that happens, you get a form from the entity that's paying you, and it goes on your tax return. And that's it for today's training. Short but sweet, and again, uh, it's not all bad news all the time. Okay, let's see. How do I get rid of that? And so again, I guess no comments this time. I put some things in the chat, and that's my story. I'm sticking with it. God bless. Have a great day, and I will see you back again shortly for some more tidbits on how to win at business. Thank you.